Hi there. I'm Shauna Lake. I'm the principal consultant at Deepen Talent Strategies. We are having so many conversations lately about exempt versus non exempt. It's actually a conversation that comes up a handful of times every week, but there are some salary thresholds that are increasing for July 2024 and then again for January 2025, where a lot of organizations are looking at the people who are borderline based on their qualifications under their duties or their salary or some combination. So, we're going to take a few minutes to do a high level reminder or basic education of what is the Fair Labor Standards Act, what is exempt versus non exempt, and then what in the heck do these changes mean for you, and what are some steps we would recommend that you take. So, let's dive in. As a quick education, the Fair Labor Standards Act, or FLSA, is a part of the Department of Labor. It was signed into law by President Roosevelt in 1938. It originally set the standard for child labor, minimum wage, and then also overtime pay. It was amended in 1963 to prohibit gender-based wage discrimination under the Equal Pay Act. There are violations for not appropriately following the Fair Labor Standards Act. And so those can be pretty steep penalties per violation. And they're for violating the EEOC, for the Equal Pay Act, for not paying appropriate overtime, for other wage and hour violations, not paying minimum wage. But also important to know that the statute of limitations is 2 years. So if you've misclassified someone, for example, and not been paying overtime because you labeled them as exempt, but they were really non exempt, you could be responsible for the back pay of overtime plus penalty going back 2 years. So it isn't something to be taken lightly. As a reminder or basic education of exempt versus non exempt, we generally think of exempt, which literally means exempt from minimum wage, exempt from the minimum wage provisions of the Fair Labor Standards Act. We generally think of exempt as people who are salaried. They are often paid the same, they are often paid a salary, but you can be paid differently than your exempt status. If you're a business owner, for example, this would be similar to how you are a registered entity. You might be a registered LLC, but you might choose to file your taxes as an S corporation. So your registration type and your tax filing type could be different. So technically, your exempt versus non-exempt status can be different between how you're paid, but almost always people who are exempt are paid a salary, and people who are non-exempt are paid hourly. So exempt, again, literally means exempt from overtime. People who are salaried earn the same amount every week, no matter how many hours they work. So if you're in a position to be making a decision about reclassifying people, or you're just creating new positions from this point forward, that's important to know. If you treat them as salaried, treat them as exempt, they could work for a minute, check one email, or work 100 hours in the week. They're going to be paid the same, or at least paid their base salary. And so if that's, you'd rather have an environment where people are paid for actual hours worked, then defaulting to non-exempt is the way to go. There are no penalties for paying people overtime and classifying people as non-exempt. The penalties come when people are misclassified as exempt and they really should have been eligible for non-exempt. So non-exempt are paid for actual hours worked, but it is possible to pay them a base of 40 hours or some base amount of a certain number of hours per week, which would feel like a salary, but they are still eligible for overtime. So you need a mechanism for knowing how many hours they work. So when they work more than 40 in a work week, they are paid at time and a half. One of the questions that we get sometimes is, can I pay somebody who meets the salary threshold and meets the definition of exempt, but they only work 30 hours a week or 35 hours a week? Can I still have them be exempt? And the answer is yes. You could actually still have them be a salaried non-exempt person. Again, you just need a mechanism for tracking when they work more than 40 in a work week. If their standard work week is 30, overtime doesn't kick in When they work 31 hours, it's when they still work more than 40, unless you have a collective bargaining agreement or different state laws that affect that. But at the federal level and in most states, it is only paid over 40 in a work week. So, common mistakes related to exempt and non exempt. The first is misclassifying someone as exempt when they really should be eligible for overtime. The second mistake is not paying people their overtime, even if it was unauthorized. So, if someone worked overtime and wasn't approved to do so, that is a behavioral issue to navigate from a discipline perspective, but you still have to pay for all the time they actually work. So, it's not a compensation issue. And then three is automatic pay deductions. Some organizations set their pay rates within their payroll system to automatically deduct an hour or 30 minutes for a lunch break. If someone worked through that lunch break, for example, but you have automatic pay deductions set up, that needs to be corrected, or there needs to be some way of flagging that so it can be corrected. So even if you have a policy that someone has to take an unpaid lunch, but they don't, again, we're back to that's a behavior to address, but they still get paid for all the time they actually work. So those types of questions come up quite a bit. Now, when we talk about classifying people as exempt, there are a few different ways to do this, generally called the duties test. So there are standards and expectations about their level of responsibility, their budget authority, their ability to hire and make firing decisions. But there are also other exemptions that we have here on the screen. There are executive exemptions, and so those would be executive officers, controllers, vice presidents, some directors. There are professional exemptions, so that's usually by your education or certifications, like being a doctor, an engineer, a CPA. There are creative professional exemptions, like being a composer, a singer, graphic designer. There are administrative exemptions, but this is a 1938 definition of administrative, so not administrative assistants. These are managers, supervisors, administrators at a high level with a lot of authority and budgetary authority. And this is about the job that they do. We're going to talk in a minute about how much money they have to earn, and both have to be true. And where we have a lot of questions often comes in this administrative category. Outside sales, traveling sales reps, people who have the ability to negotiate contracts and where a lot of their compensation is often coming in the form of commission, are often meet the exempt definition by their salary. Certain computer professionals like network analysts, developers, software engineers can fall into this exempt category. Most of the time you're going to find help desk technician type roles do not. Those tend to be non-exempt. When in doubt, it should come down to the job description and comparing it to the specific language at the Department of Labor's website. The final list here is highly compensated employees, real estate brokers, stockbrokers, as an example. I strongly encourage you to go to your favorite web browser and put in FLSA duties test. You're going to get very specific information that you can compare job descriptions to and help inform whether your employees should be exempt or non-exempt. So there are two equal but different considerations to classify somebody as exempt: the work they do, as we've just talked about here, and compared to the duties test, and how much money they earn. So in order to be, even if the job description and the duties would say that you do meet the definitions to be exempt, you also have to earn, starting on July 1st, 2024, that individual has to be paid a salary of $43,888, paid in the same amount every week, every pay period. And then that threshold is going to change again on July 1st, 2025 to be $58,656. So it's currently $35,568 to meet the salary threshold. To go to 43,888 is not an insignificant jump, but then to jump again to 58,656 on January 1st is something that is giving a lot of our clients pause, and why this is coming up a lot in conversation. Further, there will be an automatic 3-year increase based on wage data that starts kicking in 2028. And do know there are some different state requirements. California, for example, already has a higher salary threshold than the current federal minimum. So both things have to be true. Your employee has to meet the duties test and meet the minimum salary requirements. It isn't as simple as saying, if I just pay somebody this new salary threshold, I don't have to pay them overtime. It's really important to make sure that we're looking at both of those considerations. So what this means for you and what we would recommend that you think about specific to your organization are to review and update your job descriptions, because then you can verify the job duties against the Fair Labor Standards Act duties test to ensure they actually do meet the exempt status, or to determine that perhaps this individual or this role is non-exempt. So make sure the duties test is passed, and then ensure the salary threshold is met. If the answer is yes and you're going to be increasing the salary, that's probably good news for employees, and you'd want to document that in a memo or something in writing to them. And then you're going to want to update payroll for the appropriate effective date. And if someone's status is changing between exempt or non-exempt, those are usually also recorded within your payroll systems. And then, of course, there are budgetary considerations. If you're choosing to raise someone's salary because they otherwise do meet the definition of being exempt and you want them to continue to be an exempt individual, increasing their salaries, in July and then perhaps again in January is certainly going to impact our budgets. But if you go through this process and you decide that I do, in fact, have a now non-exempt employee, either because I've reviewed the job description and the duties test, or we're not going to meet the new salary threshold. So a couple things to consider here. First, if this person is now non-exempt, especially if they haven't been considered that before, are they going to clock in and out? Or is that a physical time clock? Is that a web app that you have connected to your payroll system? Is this a form that you're going to create? Some people may still use paper. If that's the case, please talk to us. We'd be happy to introduce some different technology for you. But that can have a psychological impact on an employee to be now in a position where they have to account for all of their time, clock in and out for lunches and things, so that it's not something to be taken lightly. They also perhaps have system considerations that need to go into to effect to make this happen. You also probably have some policy and procedure implications. So ensure that your definitions of what is exempt and non-exempt are clear in your employee handbook. You also want to establish that your handbook, almost all handbooks say that overtime is paid at time and a half, but there are some organizations that say if you work on a Sunday, for example, it's paid at double time. So make sure that your rules are clear about what overtime is and when, how it's paid and when it kicks in and what the rate is going to be. Also ensure your policies make it clear that overtime requires approval if that's in fact true for you. I think almost all of our clients say that overtime must be pre-approved by your supervisor, but that should be written down. And then ensure that your work week is clearly defined. So if we're counting 40 hours in a week, that has to consistently be from the same point, beginning and end point in a week. So for example, 12:01 a.m. on Sunday through midnight on Saturday might be your work week, but to have that completely and clearly spelled out is really important so that we know exactly how we're calculating those 40 hours. And this is a good time to also note that it can't be balanced between like 80 hours in a 2-week pay period, for example. It literally is more than 40 hours in any defined, consistent 7-day work week. Any hours over 40 are eligible to be paid at time and a half for overtime. And then review your procedures for clocking in and out or timekeeping. And then that's going to have to be communicated. So you're going to need to communicate new pay rates to employees, perhaps just taking their current salary and dividing by 2,080 hours to come up with an hourly rate. If you're going to be changing that at all or incorporating an increased process into this, document what those new pay rates are in a memo to each of your employees. And then it's also important to reiterate expectations and your policies to everybody about clocking in and out, approving overtime. Don't forget your supervisors need to be really clear about what their expectations are. related to anything that might be changing here. Or it's just a great opportunity to remind people of what your expectations have been. And then also update the payroll status if someone is converting from exempt to non-exempt or vice versa. Again, those are almost always noted in a payroll system, and someone's eligibility for overtime is sometimes a checkbox that would need to be adjusted within your payroll system. But also then consider any benefit implications. So that's where we'll end our conversation today. There are still some companies that I see who set PTO allowances or other benefits and differentiate between exempt or non-exempt. So that could impact your employees if that's true for you. You may also have some benefits like short-term disability, life insurance amounts that are tied to someone's salary. So anytime their pay rate changes, benefit carriers need to be notified. So just consider any benefit implications you have to the salary changes or pay rate changes you could be making at this time. So I know this is a lot of information. Please feel free to connect with us, ask us any questions. The QR code here will take you right to our scheduling calendar where you can spend some time with either myself or Lauren Byram, our senior HR business partner, to talk about your specific situations. We want to make sure that everybody's compliant and understands what this might mean for their organization. Also, feel free to connect with us on social media. We always like to hear from people, and please let us know how we can help. Thank you.